Most advice for NRIs is either outdated or incomplete. While $135 billion flowed to India last year, thousands of NRIs are struggling with scattered tax rules and confusing banking requirements. One small mistake that an NRI makes with their bank account can lead to heavy fines, and most people realize that only years later. You might be breaking the Indian law without even realizing it. Today, we are putting an end to all these confusions. This is your complete guide to NRI finance, from reclassifying your bank accounts to navigating the new tax rules. We are also deep diving into a new government-backed investment option that's changing the landscape for overseas Indians. So in this video, we will discuss who is classified as an NRI under FEMA and Income Tax Act, different types of NRI bank accounts in India, different types of investment accounts for NRIs, and a bonus info about a new government-backed investment option for NRIs. So let's jump right in. This is the Home Advantage. Welcome to another video. Let's start with the most basic of questions. Who is an NRI? There are two definitions here, both equally true. The first definition is under FEMA, or the Foreign Exchange Management Act. As per FEMA, an NRI is an Indian residing outside India for employment, business, etc. in circumstances that would indicate an intention to stay abroad indefinitely. So if you get a job and move abroad, you're instantly an NRI under FEMA. FEMA looks at intent. Do you intend to stay abroad? That's what FEMA asks. But the second definition is according to the Income Tax Act. Income tax rules are retrospective, and they primarily look at how many days you have stayed in India to determine your resident or non-resident status for that financial year. There are two broad rules of thumb that you can keep in mind to qualify as an NRI under the Income Tax Act. One, if your Indian income is less than 15 lakhs a year, then you should have spent less than 182 days in India. But if your Indian income is greater than 15 lakhs a year, then you should have spent less than 120 days in India to become an NRI. The idea is that the FEMA and Income Tax Department defines NRIs differently. So when dealing with an issue, we have to look at which act our issue comes under. For instance, if it is a tax-related issue, obviously we have to look at the definition of the Income Tax Department. And if it is a banking issue, you have to look at the FEMA definition. Alright, so now you've become an NRI. What is the very first thing you should be doing? You should convert your regular savings bank account into an NRO account. Because as per FEMA, it is illegal to maintain a regular savings bank account once you become an NRI. I know people who have been sending money to their regular savings bank account even after being an NRI for years. This is totally illegal and you can be fined heavily. So make sure you convert your regular savings account to an NRO account as soon as you become an NRI. You can do this by raising a request to your bank online through email. They might need a few documents like your foreign address proof, resident ID, job offer letter, etc. Now, if your bank cannot do this online, make sure to add this to your to-do list the next time you come to India. When you convert your savings account to an NRO account, all your account details remain the same, except your residency status, which will be changed to NRI from resident. Also, if your savings account with multiple banks, make sure to convert all of them to an NRO account or close the ones that you don't need. Now, when you go to a bank to do this, you might hear about two types of NRI accounts, NRO and NRE. It's not mandatory to open an NRE account, but there are some major benefits. Let me explain. An NRO or non-resident ordinary account is meant to handle your income that you earn in India, like your rent, dividends, etc. While an NRE or non-resident external account is meant to handle your foreign income. So what are the benefits of an NRE account? First, the interest that you earn in an NRE account is completely tax-free, be it FD, RD, or even your savings account interest. But the interest is completely taxable in an NRO account. The second benefit is repatriability. In an NRE account, you can do unlimited repatriations, which means you can transfer your money abroad with no restrictions. At the same time, in an NRO account, you can only transfer up to $1 million abroad per financial year. Plus, sending money abroad is much easier from an NRE account compared to an NRO account because you'll have to fill out a few documents to do this through an NRO account. No such documentation is required in an NRE account. In a previous video, I mentioned the importance of maintaining an emergency fund in India. If your parents or family members live in India, you can use an NRI account for this. There is no repatriation limits, plus you also get the tax benefits. Now after NRI and NRO, there is a third type of account, which is not really a savings account, but a deposit account. FCNR or foreign currency non-resident account. This is a special type of fixed deposit account that lets you keep your money in foreign currencies like USD. With this account, you can protect your money from INR depreciation. So when you start an FCNR FD, your investments will be in dollar terms and INR depreciation will not affect your returns. But there is an even better way to invest than FCNR FDs, which we'll discuss later in this video. Alright, banking done. Now comes investments. Investments is one of the most critical parts of an NRI's personal finance. So what should an NRI keep in mind while approaching investments? First of all, if you already had a Demat account before becoming an NRI, this should be converted into an NRI Demat account. To do this, you have to approach your broker and share a few documents. Not every broker supports an NRI Demat account, so check with your broker and get this sorted. Now there are two types of investment accounts for an NRI. PIS account and non-PIS account. How are these two different? PIS or Portfolio Investment Scheme accounts are used for direct equity investments in the Indian stock market. You cannot do intraday or futures and options trading with this account. Banks are mandated to report every single transaction in this account to the Reserve Bank of India. You can link your PIS account with your NRI or NRO bank account. Investments in your NRI PIS account will be fully repatriable, while the investments in your NRO PIS account will have a repatriation limit of $1 million per financial year. Please note that a PIS account is costlier to manage. AMC charges, bank charges and brokerage charges will be higher in PIS accounts. And then there is the non-PIS account. With this account, you can directly invest in stocks, mutual funds, do futures and options trading or intraday trading as well. The biggest advantage of a non-PIS account is that it is cheaper to manage. Be it AMC charges, brokerage charges or bank charges, everything will be significantly cheaper in a non-PIS account compared to a PIS account. One thing though, the $1 million per financial year limit is applicable in a non-PIS account as well. So which type of an investment account should you go for? If you want to invest your foreign income in India on a repatriable basis, you should go for a PIS account. But if you want access to a number of financial products and invest your income earned in India, go for a non-PIS account linked to your NRO account. Now there is a new investment option in India that does not require any of these investment accounts or NRI bank accounts, and that is called Gift City. Gift City is India's first international financial center similar to Dubai's DIFC. The goal is to make investing in India easier for NRIs and the benefits are insane. First of all, an NRI or NRO bank account is not mandatory to invest via Gift City. You can choose to invest directly from your foreign bank account and withdraw this investment without any paperwork directly to the same account. And there are apps like Belong that help you do this. Say you're working in Dubai, simply download the app, link your foreign bank account and directly make your investments. No transfer charges, no delays. Next comes the taxation part. Normally for NRIs, your long-term and short-term capital gains are taxed in India for mutual fund investments. The tax is 12.5% for long-term gains and 20% for short-term gains. And for NRIs, this is cut at the time of redemption itself as TDS. Now in Gift City, all of these vanishes. If you invest in India-focused mutual funds via Gift City, there is zero tax, no TDS, and you don't even have to file taxes in India for these investments. The Tata India Dynamic Equity Fund is one such fund where you can invest and redeem the investment without paying any taxes. There are more India-focused, tax-free funds that will be launching in Gift City in the coming months. And finally, Gift City also allows you to invest in foreign currency, so you don't have to deal with INR depreciation anymore. Remember we spoke about FCNR FDs earlier in the video? Although FCNR FDs also allow you to invest in foreign currency, the minimum investment duration here is 1 year and you don't get any interest if you withdraw before this tenure. But with Gift City FDs, you can invest for shorter tenures, 3, 6 or 9 months, and there is no lock-ins. So overall, Gift City is a boon for NRIs and you should add this to your portfolio. Many mutual funds have already launched in Gift City from AMCs like Tata, Edelweiss, DSP, etc. and many more are launching soon. And you can use Belong to make your very first investment via Gift City in a fully digital way. So in this video, we discussed all the basics that an NRI should know before starting their investments. We spoke about the definition of an NRI, the types of NRI bank accounts, the types of NRI investment accounts, and one of the best investments every NRI should do in 2026. If you have any questions, let us know in the comments. Subscribe and follow along for more NRI insights. This is the Home Advantage. See you in the next video.